Hello traders and welcome to another video review. Today is Thursday, February 2nd, 2023. Let's find out what's going on the Forex calendar. We are going to sort out our calendar with the very important event. And of course, today the key event is the European Central Bank Interest Rate Decision. Yesterday we got the interest rate decision from the American Fed. The Fed hikes the rates from 4.50% to 4.75% as expected. What is going to do the ECB and Bank of England as well? So two interest rate decisions today. Very interesting day for the Forex traders. Bank of England interest rate decision scheduled for release at 1 p.m. Market participants expect Bank of England to hike from 3.5 to 4%, which is more than the hike from the Fed yesterday. Of course, we will have the MPC meeting minutes, and then 2:15 there is interest rate decision made by the ECB together with the marginal lending facility, ECB monetary policy statement, and the deposit facility rate. What else is here? ECB press conference that starts at 2:45. And then of course we got the speech from the ECB President Christine Lagarde. There are two speeches there. One supposed to start 4:15 and the second supposed to start 7:30. In the meantime, we got the speech from the Bank of England Governor Bailey, 3:15, and the data from the US initial jobless claims are scheduled for release 2:30. So very interesting day, plenty of speeches, plenty of data, key data released to the Forex market today. Basically are being right now under very close attention by the market participants. So this is one of these days that scalpers and day traders are waiting for. Let's see what the outcome of this day will be. Please remember, Bank of England is expected to hike from 3.5% to 4%. European Central Bank is expected to hike from 2.5% to 3%. How it's going to be, we will find out soon. Now let's go first to the British pound, and then we'll of course take a look at the euro dollar. British pound first, okay, euro dollar first, okay, it doesn't actually matters. What do we have on the euro dollar 4-hour chart? Let's find out where is the support, because the market broke to the upside after the yesterday's Fed's decision. 1.0929 is now the technical support, and we retraced fully 50% of the last wave down. So let me just show you guys what I mean, so you don't feel lost. This is the down movement, yeah, from this high, or from this high to this low, and that movement here is 50% already. So we retraced the 50% of the last wave down. Believe me, 1.29 was 16 pips from the 50% Fibonacci retracement. The local high is 1.1033. So we passed above the 50% already. We are heading towards 60%. So let's find out where is the 60%. Let me just skip back to the let me skip back to the daily time frame chart, and let's find out what is the next target for the bulls, which is 61% of the Fibonacci retracement of the whole big down trend. We got the Fibonacci retracement. Let me just get rid of the 60 of the magnet. Now this is the magnet, and we are going to use this high, and we are going to use this nice low here. There you go. And as I said, 50% already magnet off. Of 50% already retraced, yeah. 61%. Let me just point it. Let me just place a line here for you guys. 60% is this level, 1.1281. That's the next target for bulls. Basically, this is the next target for bulls. Let me just find out the situation here. Well, it looks very bullish, but on the lower time frames, of course, we got some pullback. Next target is on the chart. There you go. Next target is on the chart. We can even manipulate a little bit here on the lower time frame, so you can see. No, it was okay. It was okay. It was apparently okay. There you go. That's the 61% of the Fibonacci retracement. Breakout to the upside is done. Let me just zoom in and see what is going on here. Of course, the momentum jumps way above the level of 70 on the 4-hour chart, which means that right now we are trading into extremely overbought market conditions. So we need some sort of the pullback. Please notice the fact that this level 1.0929 has not been tested yet. So it all depends how big the pullback will be. The local high is located at 1.0133. There you go. This is the local high, and the next target is on the screen. Yeah, there you go. The next target is here. So there is still a room for the upside. Nevertheless, it still looks like the main impulsive wave to the upside is about to finish, and we should wait for another wave to the downside in a pullback wave or corrective wave before another advance to the upside towards 61% of the Fibonacci retracement. As I said before, British pound. What is British pound doing? Not much. Not much, because we are still waiting for the Bank of England interest rate decision. The Fibonacci retracement level is about the same as the euro dollar, the 50%, so it's hovering around the 50% of the Fibonacci retracement, and the technical resistance is 1.2447. Right now, as you can see here on this chart, we are trading just in between the areas of the 100 days, 100 periods moving average and 50 periods moving average. We are bouncing up and down, waiting for the trigger, waiting for the fundamental trigger to apparently move in some direction. Of course, the momentum jumped a little bit above the level of 50. Nevertheless, this is one big consolidation pattern, one big, of course, you can say the distribution pattern, partial distribution pattern. So right now, just between these two zones, the whole price action is taking place. So please be careful. Please keep an eye on the current situation on the British pound, because it looks like this market is ready for another jump to the upside. Please take a look at this reaction on the yesterday's Fed decision. Of course, this is British pound to American dollar, so there is always some kind of a backfire towards the British pound after the interest rate decision made by Fed and not by the Bank of England. Nevertheless, that's a very promising pattern. That's the first pattern we have around the level of 1.2282. That's another interesting candle. This is all bullish candle. This is all bullish pattern. This is again bullish pattern, and again this pattern is bullish. So bulls are basically right now defending 1.2282 and 1.2262. That 20 pip zone is being defended by bulls, and they don't want prices to go lower. Why? Because if bears will break through this zone, the next target is 1.2086, which is almost 150 pips below the current 170 pips below the current technical support, which is why the other possible movement, if the bulls are defending this zone, this supply zone, is of course the technical resistance 1.2447, eventually 1.2431, and a breakout higher towards the 1.25 round number. So that's the outlook for the British pound. Of course, if there is a hike in line with the expectations, the British pound should go higher. So what will happen with the US dollar? Let's find out what will happen with the US dollar index, of course. And as you can see, after the test of the 100 periods moving average on a 4-hour chart, we have the rejection, bearish, basically this is bearish engulfing pattern on the 4-hour chart, and the breakout below the local technical support around the level of 1.150. There's a big breakout to the downside. The local low on the US dollar index was so far made at 100.79, and currently those are the extremely oversold levels. Market is trading in extremely oversold conditions, so some kind of a pullback is of course welcome. What is the next most probable scenario on the US dollar index is that the US dollar index will go towards the breakout level, and right now it's technical resistance. Let me just put some arrows here. There you go. That's the scenario for the US dollar, and then we will continue to move lower. In that situation, basically, the US dollar should go higher. As I said, 61% of the Fibonacci retracement is the next target for the US dollar, and the US dollar index next target is, after the 100.79 is violated, the next target is 100 points level. So let me just put it on the chart. There you go, 199.99, and 100 points level is the next round number and round level for the US dollar index. It doesn't mean it will go there tomorrow or today, but that's the next target from the perspective of 4-hour chart. Okay, last market that we are going to take a look at is Bitcoin. And what is Bitcoin doing? As you can see, it made a nice local high, which can be counted as the swing high as well, because it was made around the $25,000 level. So the high is 24,258. So that's the local high. Let me just point it out for you guys. There you go. This is the local high, and this is the local low. So as long as we trade, this is the technical support, and the local low is around here. As long as we trade above the technical support located at 23,289, the outlook remains bearish. Nevertheless, please pay the attention to the divergence between the market and the momentum oscillator. There is still decline in the momentum here, and the market keeps trading higher, keeps making higher highs. Nevertheless, this higher high is just a partial, to be honest. It's just a, you know, marginal higher high. So it's not that let's say impressive. It's not that fascinating, and this is not a strong breakout. Nevertheless, any continuation of the movement to the upside will directly expose. Let me show you this level. With directly exposed, I can't make it any smaller. Let's change the time frame to daily. 25,000, and there you go, this level, 25,200 level. So that's the swing high from the recent rally. And if we continue to move up, this is the next target for the Bitcoin bulls. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow for the NFP Friday. So hope you will be with me during this analysis. Thank you very much for watching, and hope to see you guys tomorrow. Take care, and bye bye.